Hello everyone, welcome to our channel Intelligent Investor. Last video we seen about assets, a part of balance sheet, and in this video we are going to discuss about liabilities and equity, another part of balance sheet. First, liabilities. Liabilities are of two types. One is current liabilities and another one is non-current liabilities. Current liabilities for within a year and non-current liabilities for more than 1 year. Current liabilities. Upcoming topics belongs to current liabilities. First, short-term borrowing. If a company purchases something with debt using short-term loans or credit cards which has been paid back in short term, these are liabilities comes under short-term borrowings. Note that if short-term borrowings is greater than cash and cash equivalent in asset section of balance sheet, that suggests that the company may be in poor financial health. Next, trade payable. These are the debit to regular suppliers of goods like raw material which is also paid off in short time. Next, short-term provision. Short-term provisions are unexpected one and it occurs by mistake or accidentally. Example of short-term provisions are product warranty. If a company gives warranty for the products but any issues occur and the company has to repay or remake it. And last one is other current liabilities. Other current liabilities are liabilities of short time which does not belongs to above topics. Second type is non-current liabilities. Non-current liabilities for more than 1 year. Upcoming topics belongs to non-current liabilities. Here also topics are all same of current liabilities, but the difference is time period. First, long-term borrowings. Long-term borrowings are long-term debt of company which has been paid back by a company and it takes more than a year to pay it back. Example of long-term borrowings are bonds and loans. In bond, the company has to repay the money on maturity period and the loan also paid on specific date to avoid extra interest. Note that if a company takes a loan for 5 years, the interest has to pay is mentioned in short-term borrowings and the remaining total loan amount is mentioned in long-term borrowings of balance sheet. Anyway, remind that overdebt is injurious to a company. Next one is deferred tax liabilities. That is, the company has to pay tax for the sales of the products. These are unavoidable one. Next, long-term provision. Long-term provision is also same as short-term provision, but it takes more than 1 year of time. Last one is other long-term liabilities. Other long-term liabilities are liabilities of long-term which does not belong to above topics. To attain total liabilities, we have to sum both current and non-current liabilities. Next section is equity section. In equity section, first one is share capital. Basically, share capital is obtained by product of number of shares and its face value. Share capital are the fund given by the investor while initial public offering, that is IPO. Remind that market value of share will fluctuate in secondary market, but it does not affect share capital. That is, share capital always not equal to market value. Second one is reserve and surplus. Reserve gives how much fund will kept remain in hand and surplus money is due to excess demand of the company's product. Reserve and surplus also gives financial health of company because it is the value obtained from earnings of the company. These are the funds used to pay debt, dividend or otherwise used for research and development purposes. Therefore, total shareholders fund is given by the sum of share capital and reserves and surplus. Finally, for perfect balance sheet, the total liabilities and equity must equal to asset in balance sheet. Thank you.